For our Trader Talk segment today, we're going to do something a little different. In fact, we're going to bring in Blue Chip Trader, who is actually a stranger to this segment. You usually don't do a whole lot because you're on throughout the day and you give a lot of your ideas. But we thought it might be a good segment to have some of that genesis of the ideas that you come out on the page and help people find good ideas and make some money with. So why don't you talk through some of your pre-market prep?
Yeah, I guess I'm good at filling up the dead air that comes out there on audio. But yeah, so this is basically, hopefully it's a short one here. It should be basic, simple stuff, but I figured, as we were discussing earlier, this would probably be a good time just to keep everyone abreast of what it means to actually, be a trader, or what it means to be, whether a part-time trader or a full-time trader, of certain things that you have to go through. Now, obviously, if you're listening, you're probably already engaged in the markets to some degree. You have some sort of vested interest, and you're finding your way throughout. It's a lifelong journey of learning of how to approach the markets, and you have this. I would almost want to call it. We all have this obsession or addiction to the markets, and we want to track things each day. And over the years, it seems like a lot of people try to approach the markets from different ways, and obviously you have to find what works best for you. So let me just, before someone starts disputing my approach, let me just preface the way I approach it, okay? I am very technically oriented. I basically look at more charts than I do read words or articles or anything else. I am a firm believer that the charts tell you exactly what you need to know, that the trends that are in place, the patterns that are in place, the rotations that are going on, the behavior of price action, that's really, it's I'm not dismissing fundamentals or a story or any economic data or quantitative that's out there. I'm just saying that's all reflective in price itself, because price itself is the end-all, be-all deciding factor when you put your money where your mouth is, so to speak, and that's going to be where the profits and losses come from, which is really what this entire trading aspect is about. It's about making money. So for me, it's like, well, let's just go right to the source itself and look at price action, which is the determining factor of whether you make money or not. Everything else to me is just pieces of the puzzle, and you can kind of fit them in, but price itself is a key component for me. Now, with that said, I know there's a good handful of people out there that typically they're always looking for the catalyst. They're looking for that fundamental driver or economic driver, or they're a story or something, some narrative that's going to be moving stock prices in a certain direction. And that's fine, but I just feel like I rather just watch the price action itself and then worry about why it's moving, or why, what the cause is and what's pushing the engine, later on. So, and that's basically the way I approach preparation for the market each night. And I'll just go into that from there with that primer set out there. So I do have I think when I take a step back and I look at my duties here at Briefing, I think I do have a little bit of an advantage over your typical trader. And the reason being is I have to post columns to the site, and by updating certain pages and columns and reports to the site, that basically keeps me disciplined to go through a certain number of charts and certain aspects consistently on a daily basis. Whereas if you don't have that responsibility, well, I guess you can always just dismiss it from time to time or forget about it. But I don't really have that pleasure by any means. So I guess it's a double-edged sword, because I constantly have to look at this stuff. So Jim's going to post this on the visual and follow along here. So I guess we could start off why don't we start off with the technical take first, if you don't mind, Jim. That's going to be under the perspective drop-down menu. And when you click on that, about halfway down is a column called the technical take. And now what this is just a quick bullet point synopsis of intermarket, relationships going on from a very basic perspective. But the beauty of this page is that it keeps you aware of key trends in the major indices and the intermarket relationships that are going on in some of the key ones that are out there. Now, the top four charts that are there are your major indices. You got the Dow, the S&P, the Nasdaq, and the Russell small caps. The next group down below is the transportation index, which I've always found to be a key driving indicator for economic growth or lack thereof. I'm a firm believer of the Dow theory, where transports, if they're doing well, it means the economy is doing well, because you're basically pushing goods around the world and around the country. So if they're doing well, then there's a good chance the economics are doing well. Therefore, the price action and everything else should be following suit there. So I keep track of the transportation index a lot. The next one is going to be the 10-year the bond market. So basically, obviously, we all know that interest rates are a major contributing factor to the economics and the flow of everything, and they're highly watched. So you have to put that out there as a indicator of the trends that are going on there, whether they're sinking or dropping, as well as the relationship of bonds to stocks. And try to figure out sometimes whether you're in this risk on or risk off type of mentality. The UUP is the next one. That's the US dollar. Again, another driving force in a global economy, with all currencies related to it, or most currencies are related to it. It's interest rate sensitivity. There's just so much going on there. Political agendas come through, flying through there as well. So there's just so much going on there. So it's definitely a major player in the intermarket relationships. Crude oil, USO. I follow this ETF. Obviously, crude oil, it supports the almost everything in the world, from plastics to transportation to you name it. It's just a hot. It is one of the, I would say, the commodity in the world that is just super dependent in the world. So it's a major player to watch those prices. Down back to the left there, we have gold, GLD. And this, you can make I guess you've seen cases over the years. Some people say gold is dead. It's not even worth paying attention to anymore. Then you have other people sitting there arguing it's an inflationary thing, or it's a safe haven, or it's still a good, whatever it is, valuable sign of jewelry or anything else. I mean, there's so many different stories and narratives behind gold market. But it does typically trade inverse of the US dollar. So it's just something that is still a major player. I don't know where. Sometimes it fits in all the time. Sometimes it fits in great. Sometimes it doesn't. It seems to be in its own little world. But it's still nonetheless a pretty major commodity that's out there that needs to be tracked. And then the next three charts on the bottom, down at the right there, these are my go-to, I guess, sentiment indicators is the best way to describe them. So the first one, the CPC, is the put-call ratio, and you've heard us discuss this a lot before. Put-call ratio, I don't think it's the greatest timing tool in the world, but I do think it is a pretty good sentiment indicator. And any time, in my experience, just looking back at the charts, that's basically how I view my experience, and I just look at the levels and the way the market behaves. But when this reading gets below 0.8, it signifies that there could be too much bullishness going on in the market. And again, you can't just take that in its own little bubble. You have to basically look at price action itself to see if the market's overextended, to see if that's actually in play there, and coming up into resistance levels, etc. It's quite possible that sometimes the put-call ratio will get low on the start of a breakout, which is something you really want to see, because that's telling you that this is a very strong breakout and there's a lot of people behind that one. It doesn't typically tend to fail. It tends to grind higher if that's the case. So always watching that one. And it's really more so the extremes is what we're looking for, just to get us a feel for sentiment. The next one is the VIX, the Volatility Index. And again, I don't use these as timing indicators. I don't think the VIX is a really good timing indicator, but I do think it's a really good indicator for telling you how the market is generally approaching things from a risk-on, risk-off perspective based upon volatility. Obviously, higher volatility is often associated with corrective moves in the market, because a lot of times people are much quicker to head for the exits and cut their losses than they are in buying stocks. Buying stocks tends to be a more gradual process where prices grind higher, and the selling process tends to be more of a panicky, get me out, head for the exits type of environment. And volatility is always going to reflect that. Typically, when the VIX is above 20, I've stated that is a risk off type of environment for a lot of big funds and institutions, and the reason being is you're getting a lot of bang for your buck. You're getting more bang for your buck than when you did when it's trading below 15 and in those lower teen levels. So when you're starting to get a 20 or 25 or closer to 30 or higher, you're getting a lot of intraday volatility. You don't need to risk that much more in order to get the same amount of movement. So my philosophy is to usually cut back on share size and approach the market from a much, much shorter term perspective. Over 20 is usually a fantastic day trading environment. Under 20 and under 15 and the lower you go, it's probably more geared towards swing trading, position trading, and maybe even longer term investments horizons, depending on how long that can last. So it's just one of those key things to keep in the back of your mind to tell you what type of environment that I'm in. And then the final one, that NYMO, N-Y-M-O, this is the New York Stock Exchange McClellan Oscillator. I can't remember the exact calculations, but if I guess it's, I want to say it's the 39 period moving average versus the 19 period moving averages of advancers over decliners. I know that's a mouthful, but it's basically telling you the spread between two moving averages of the advancers and decliners. And again, not necessarily the greatest timing indicator in the world. It's better than, in my opinion, than the VIX and the put-call ratio. But it's telling you more about the price action and the spreads that are going on between the amount of stocks that are advancing and declining. And when that reaches an extreme, which is typically at 50, in my experience, it's been 50-point increments. So that's why I have those two bars highlighted there, plus 50, minus 50, plus 100, minus 100. And it can go beyond 100. It can go to 150 or minus 150. I've seen that at times during very sharp corrective moves. But usually 50-point increments appear to be these stopping points where the market will either stabilize or snap back to where the spreads or that extended move that's in play tends to do more of a regression type of analysis. So that's basically what I look at, and I post these charts every day. And then the top point, the bullet points, are basically exactly what I'm seeing at that point in time. Sometimes I don't even need to update them, because something like the VIX doesn't really need to be updated because it's been trading, underneath a downtrend line and in these levels for a while. So, but they're just basic bullet points that just describe the current situation in the market. And this is basically how I would say every single day I have a framework laid out in my head about current market conditions. And I've always talked about how context is key. And this is the backdrop of a lot of my approaches to trading, or my sentiment, or when I get on air and talk, why I have more of a bullish stance or a bearish stance from a swing trading perspective. A lot of it is based upon just these 12 charts. So it's just this intermarket relationship that I'm consistently following. So now the next part that I do also every day is the TA page scans, and that's going to be found underneath the investing and trading column. It's about halfway down. It says TA page scans. And I've said before, this is a proprietary bunch of scans that I came up with over the years, probably 15 years ago, I'd say. And I guess it shouldn't really say proprietary. I mean, they're basically patterns that it's your standard, technical analysis 101 type of patterns that are out there. And I just found that it was much easier for me to just run scans on a software and to define in a particular parameters for a certain group of stocks and just display them in a table format each day, rather than having to run through all S&P 500 stocks, rather than have run through all, every stock in the market or sector and to go through. Now, I do say if you have time to do that, I know I've talked to a few fund managers and asset managers who they will spend, an hour each day after the market closes running through all 1,500 stocks in the S&P. That's small caps, large caps, mid caps, and they break it all down into sectors. So they take that. They're constantly looking at it just to get a sense of what's performing, what looks good, what doesn't look good, and they take their notes and whatnot. Or you can do that throughout the day, if you have the time throughout the day. So it gives them a sense of what's going on in the market. Now, I'll be the first one to admit that I have many balls to juggle in my life, from work to family to friends to health to spiritual to everything. There's just so much going on, and as much as I would love to dedicate an hour or two each day of my life as to look at every single stock out there, the reality is that that's something that I don't have the pleasure of doing all the time. And I would say I actually only get a chance to do that maybe once or twice a month, and it's got to be in the wee early mornings on like a Saturday, because I can't sleep at night or something like that. So got to do it before everybody else wakes up in the house. So this basically is what I came up with years ago with the TA scans page, was a shortcut, I guess you could say, for me to do my homework. And again, I think I do have a little bit of an advantage, because this is not an automated table that gets put together. I do have to actually spend 20 to 30 minutes each night, sometimes each morning. Again, I do have, some days are just not good for me to update it right after the close. I do try to do my best, but I always get it out before the opening the next day. But I do have the advantage of doing this manually, and by doing it manually, it just gives me a sense of I could see which stocks I'm typing in repeatedly. And so I've said this before, always pay attention if you're just glancing through any stock or stock that jumps out on more than one scan, because it's probably something that's probably somewhat significant. And I've also said that there should also be a theme that goes through here. So when I'm typing out, say, the shallow pullback shorts for today, I start typing these out. I look at the tickers, and all of a sudden, in the back of my head, I could say, look at that. I see there's actually some healthcare stocks that showed up here. I got CVS. I got United Healthcare, UNH. I have WBA, that's Walgreens. So it's like those are all the healthcare providing stocks and Anthem is another one, ANTM, that recently came under pressure the last 2 or 3 weeks. And I know I was short them over a week ago, and I know they got extended to the downside because they were all showing up on the oversold scans to start this week back on Monday. And there was a handful of them there, and now they went from the oversold scan to potentially shallow pullback short candidates. Now, that just tells me that there's an opportunity that's potentially setting up there without even having to look at a chart at all. I just know that there's a theme going on in the healthcare space there just by recognizing the tickers. So it's just something that I just go through in the process. Again, part of processing what's going on in the market and taking a quick analytical approach without actually ever having to look at the charts. I could just see what's going on there. Now, as for the actual trading opportunities, I look at some of these stocks today. Well, the IHF continued to bounce higher. UNH is actually up $5 here. I think CVS, let's look at that one, up $2. So they're still showing relative strength here on this bounce back. Now, as to whether you want to short into the strength, thinking that it's going to pause and roll over, that's going to be a whole different type of analysis that I'm not going into. I'm just trying to describe my my behaviors here. But maybe this is a group that I just keep in the back of my mind if they do start to roll over this afternoon, or if they start to take out today's lows tomorrow. I know that they're already there on the pullback short setup. I know the charts look pretty weak. They're in downtrends, etc. And then they could be reshorted as a potential trading opportunity. So what I would do is I would start to set alerts. Now I do use the for these TA page scans. I use stockcharts.com. We have no affiliation with them. I'm just sharing the information. But stockcharts.com, I created the scans using their website, and then for my daily intraday alerts, I have the eSignal trade software. It's not a trading platform as far as I'm aware of, but eSignal charting software is what I use. It's just real simple. I just right-click, type in a price, and the alert is set to go. And so that's basically what I do. I basically look for themes on the TA page scans, something like what I just highlighted with these healthcare providers. I look at the charts, and I will just go through and set alerts for 5 of these stocks. It takes me 10 seconds tops to look at the chart and set an alert right at a level that is probably somewhere close to a prior day's high, a prior day's low, depending on if I'm bullish or bearish. And then maybe even if I can't find anything, but I like the theme that's going on there, I'll maybe go out to a weekly time frame and set an alert to see if a support or resistance level on a weekly time frame gets hit. I'll just throw that alert out there. Or if it's a little bit more volatile of a name, I'll drop down to say a 60-minute time frame, because that's usually the more volatile a stock. You're better off going into smaller time frames. And I'll look at a 60-minute time frame to identify any sort of intraday support, resistance level gaps, and I'll just start setting quick alerts for support and resistance levels there. And that's it. It's basically a set it and forget it type of analysis for me. Now, something I look at the TA page scans here, and I see Mohawk is there, MHK. Well, it's a carpet company. I can tell you right off the bat, I have zero interest in trading Mohawk these days, and I wouldn't even waste my time technically, just looking at the chart, because I just know it's not a stock that I'm overly familiar with, and I don't particularly feel like trading it. So usually, if I'm in a rush, I wouldn't even bother looking at tickers that I have no interest in trading whatsoever. But you look at the chart and maybe you see something different. But for me, it's just not. If I'm not familiar with the ticker, or I'm not comfortable, or I've always said I don't like trading biotechs, then yeah, I'll definitely a pass on those. But then overall, after I do all after I type in all the tickers, again, I don't necessarily look at all the charts for all of these, because that's not really what it's about. It's about assessing and that's why I do the technical take, kind of look at that first. It's about where you are in the market. So if I know that the market's been running higher for 3 days in a row, or 4 days in a row like we have now, well, I'm going to be probably more interested in the overbought candidates, because or the power up candidates, which tells me that those names have been running for 3 or more days. So those might be, because if the market starts to stall out, then maybe these overbought candidates that have been running harder for 3, 4, 5 days are going to be the ones that basically correct first. And we saw this coming in on Monday. The market had pulled back last week, and if you go back to Monday's TA page scans, you're going to see the oversold candidates were HCA, UNH, Cigna, and those were ideal opportunities to step up and buy for a bounce. I didn't personally do it because I was already short the IHF, but I used it as a signal to start taking some profits in the IHF and cover some of my short position. So again, you can read between the lines there, and then speaking of reading between the lines, some of these scans, the ones that are in the black color without the red and the green, they are basically considered what I would say ranging or neutral scans, where the market it's not really telling you if there's anything overly bullish or overly bearish in them, whereas the red ones are more of a bearish type of setup and the green ones are more of a bullish type of setup. And so then if you just take a step back from your screen and let your eyes go out of focus a little bit, I know this is getting a little deep here, but if you just let your eyes get out of focus, you can just see which scans had the most results, and you'd be surprised. So when the markets are really poor and weak or oversold, you're going to see more breakdowns and more oversold candidates, and different types of setups based upon how the market's behaving. Right now, I always look at the wide range breakouts and the wide range breakdowns. There was only 5 that showed up on the breakouts yesterday, and 4 that showed up on the breakdowns, and one of them was bonds. So it's like, to me, I look at this, I'm like, this is not really a super strong market that we have going on here, but it's not also a super weak market. It seems more like a very balanced type of environment. Same thing when I look at overbought and oversold. I'm like, look at that. There's nothing that's really kind of standing out that's looking exceptionally biased to one side. Maybe the pullback shorts, but again, pullback shorts means that the stocks have been bouncing from recent oversold levels. So it's just kind of, this is the way that I kind of just assess and look at things in the market, and try to figure out whether I should be skewed more towards the long side or the buy side here. And then when I find that type of theme and those types of setups, then I go to the charts and then I just type in I look for just key support resistance levels, maybe some key moving averages if anything, and then the weekly time frames as well, just to set those alerts and forget it. Now, if you don't have a software that allows you to set alerts, I have come across one trader in my past, and actually, believe it or not, when I mentioned this last week, somebody on feedback said that they also do this. They do actually put out good till cancel stop orders in their brokerage account on names that they're interested in. And what that does is, it's in order to buy an odd lot, usually, whether it's 1 share or 10 shares or whatever it is, but it's in order to buy an extremely small amount of stock at a particular level that just sits out there. And when price action moves through that level, you'll get automatically executed on that trade for that super small amount. But that's basically your alert to say, hey, I had my alert set at this above a resistance level or at a support level or whatever it was that you were trying to do. But rather than having an actual charting software to rely on, you actually started a starter position. You actually initiated a trade, and that now brings it to your attention, and now you have the decision to either sit there and it brings it into your focus. Now you can draw your attention to that stock or that sector a little bit more closely, and you decide whether you want to just kill it and get rid of it because you don't like it anymore or whatever, or just start focusing more on that level and maybe consider adding to it a little bit more and whatnot. So just a side note there, and that's pretty much it. I mean, the only other thing that I didn't mention here would be sectors. In addition to the TA page scans and the technical take, I am a really big fan of sector rotations, relative strength and relative weakness, and which sectors are outperforming the S&P. I am a firm believer that money is going to flow into outperforming sectors and flow out of underperforming sectors throughout different cycles of the year. And I pay very close attention to the sector ETFs as well as the industry ETFs, and I'm always trying to find some sort of new momentum trend going on there. Obviously, you hear me on Trader Audio constantly highlighting sector action all the time and trying to identify what's developing there, what's if it's weak, strong, and then sometimes I'll highlight some of the key components in some of those sectors to give us a better sense of what's leading or lagging those groups there. So obviously I set a ton of alerts on the sector ETFs as well. That's pretty much it in a nutshell. The only other page I would highlight would be the that I am involved in is the liquid momentum focus list, and that could be found right underneath that investing and trading drop-down menu underneath, right smack in the middle there, liquid momentum. And again, this is another scan that we came up with about 10 years ago. It highlights what we consider to be the top 50 stocks in the market, and it's based upon liquidity, volatility, and momentum performance. And this has been pretty much my go-to focus list. I know some people say, well, how come I'm not mentioning my setups each morning, the stocks that I like each morning? Well, basically it's this entire list. It's always going to be the focus list. There's nothing for me to really say what I'm looking at because I have alerts set for pretty much every single one of these stocks. Every day, even if I don't set them up before and after them, when the market's not trading, when the market's closed, I'm always cycling through these leading stocks throughout the day. I mean, I must go through these charts, these top 50 charts, at least three, 4 times a day throughout the session. I'm always looking at them, and you always hear me talk about them. I mean, look at Adobe is up there, Broadcom is there. We've already highlighted the fact that they're both reporting earnings tomorrow. PayPal is doing fantastic today. Salesforce, I love that stock. Microsoft, I mentioned that one this morning. Netflix, I mentioned this morning. Boeing, I've been short that one. I mean, Roku, there was a write-up on that one today, so that's in play. I mean, Twilio, I mean, you can just go through the whole list here. You know the names because I talk about them nearly all the time. And then even if you don't like particular names, look a little bit to the right there and see the industry sector, and you got a breakdown there. So each one of those should be able to be filed away into an ETF. That is, so I'm always looking for a theme there as well. And lately it's been a lot of this software-related application names. I see a lot of medical-related names that have been showing up on the list. Finance, I see credit card companies, a couple finance names. I'm just glancing through really quick to see where I really want to be situated. For example, I don't see any gold stocks or energy stocks in this group right now, or retail for that matter. There is one retail way down, I guess Dollar General. So I'm not going to really be interested in trading those. It's that simple. And then I'm going to look at the TA page scans and see if any of these names ring a bell when I go through them. And if it shows up in the TA page scans, well, then I'm going to be even more interested in it. So it's kind of this whole, like I said, pieces of the puzzle, putting everything in context and trying to look at everything. And I do this throughout the day. Not so much when the market closes because I have, like I said, other things going on, but definitely pre-market and then throughout the trading day. I'm constantly cycling through everything and looking at the charts and setting alerts and trying to get a good sense for where the opportunities lie. And I guess that's really it in a nutshell, in a 35-minute nutshell. So hopefully you learned a little something there and get to utilize the site a little bit more. Feel free to provide some feedback if you found any of these pages useful. And again, you can expand. It's not just the liquid momentum focus list too. I mean, you can expand all of this analysis to our other focus lists, like the emerging growth focus list, the yield focus list, the value focus list. There's just so many different areas and venues you can explore on our site, and then kind of put these pieces of the puzzle together. The IPO one is a good one too. I wouldn't ignore the next big ideas and whatnot. So just so many setups overall, and unfortunately, and we've said this before, you can't trade everything. I look at PayPal here. It was on my list of stocks of really good setups this week, and when I highlighted it, I think I highlighted that chart on the update on Monday for liquid momentum, and here it is breaking out. I missed the trade, but that happens. It was there. It was on the chart. It had a good support level. pulled back to the rising 20-day moving average and just took off here. I would have liked to have participated in it, but like I said, sometimes you can see everything, but you can't always trade everything, whether it's just a matter of manpower or a matter of money. But that's not the point. The point is just to get on the right side of things, to get on the right side of the page, to find the edge, to find the relative strength, to find the right sector, and to assess your risk on the trade before you enter and then go with it. So, all right, that's it. So if you have any questions, comments, or feedback, as always, use that Talk to Us link at the top of the page. This is recorded, so you can always watch it for later viewing, and it will be posted to the site later on. So thanks for listening.